XRP, the full story and analysis of Ripple's cryptocurrency. Before we start, likes, comments and follows really help the channel grow, so I can bring you great content, so would appreciate that if you could. I was an early adopter of XRP in January 2017 when you had to use PayPal to open a wallet. The hardcore XRP holder will know this well. Over time, and working with banks on another project, I saw banks rejecting XRP. So my view of XRP changed as banks wanted their own networks and stablecoins. I thought I would revisit and reevaluate my position and share my findings with you. And I found some very interesting information you will absolutely want to hear. XRP was born in 2012 out of a vision to create a faster, more efficient digital asset for payments. Three developers, David Schwartz, Jed McCaleb and Arthur Brito, started coding a new ledger in 2011 to improve on Bitcoin's limitations. By June 2012, they launched the XRP ledger, XRPL, with a fixed supply of 100 billion XRP pre-mined tokens. Shortly after, entrepreneur Chris Larsen joined, and together they founded a company called Newcoin in September 2012, quickly renamed OpenCoin, eventually Ripple Labs. Early on, the creators gifted 80 billion XRP to this new company, Ripple, to develop use cases, while the remaining 20 billion went to the founders and early team members. For context, one co-founder, Jed McCaleb, later left to start Stellar, and his XRP stake was large enough to require a timed selling agreement. Originally, the token was often called Ripples and the technology Ripple, which caused confusion. Over time, the community adopted the ticker XRP to refer to the asset, reserving Ripple for the company. By 2013, OpenCoin rebranded to Ripple Labs, now just Ripple. Right from the start, Ripple aimed to work with the existing financial system, not against it. Instead of promoting XRP as a people's currency to overthrow banks, Ripple focused on helping banks and payment providers move money more efficiently. This strategy attracted high-profile investors and partners. By the late 2010s, Ripple had backing from firms like Andreessen Horowitz and Google Ventures, and it was forging partnerships with banks worldwide. XRP's value exploded during the 2017 crypto boom. At one point in 2018, it briefly became the second largest cryptocurrency, with a market cap over $120 billion. But this growing success would soon attract regulatory scrutiny, leading to one of the crypto industry's most dramatic legal battles. Perhaps the biggest chapter in XRP's story is its legal showdown with the US Securities and Exchange Commission, SEC. Here's how the saga unfolded. December 21st, 2020, bombshell lawsuit. The SEC sued Ripple Labs and its executives, CEO Brad Garlinghouse and Chairman Chris Larsen, for allegedly raising $1.3 billion by selling XRP as an unregistered security. The SEC argued that XRP sales constituted an investment contract under the Howey test, meaning people bought XRP expecting profits from Ripple's efforts, which would make XRP a security in the SEC's view. This late 2020 lawsuit shocked the crypto world. XRP's price plummeted over 50% within days as panic set in. Major exchanges like Coinbase, Binance, US, and Kraken swiftly suspended or delisted XRP trading in the US to avoid trouble. The once third largest crypto was suddenly mired in uncertainty, and many US investors were left unable to trade it. Ripple's defense. Ripple hit back insisting XRP is not a security, but rather a digital currency like Bitcoin. They pointed out that the SEC had previously declared Bitcoin and Ether not securities due to their decentralized nature. Ripple argued XRP likewise operates on an open network independent of the company's actions, and that using XRP in transactions, for example, as a bridge currency in payments, underscores its utility, not an investment contract. Another prong of Ripple's defense was the fair notice argument, essentially claiming that the SEC never warned anyone that XRP was considered a security during the 7 years since XRP's launch. The legal fight quickly expanded into a high-stakes battle over how to classify cryptocurrencies, and both sides dug in for a long fight, gathering evidence, including internal SEC documents, and lining up expert witnesses. 2021 to 2022, legal wrangling. The case slogged through its discovery phase. Notably, in March 2021, a judge acknowledged that XRP has currency value, a small early win for Ripple's narrative. Both sides scored minor victories on what evidence could be included. Ripple gained access to internal SEC emails, including a 2018 speech by a former official, Bill Hinman, about Ethereum's legal status, which revealed internal debate about crypto classifications. The SEC, meanwhile, successfully pushed back on some of Ripple's requests and extended certain deadlines. By late 2022, both Ripple and the SEC had filed motions for summary judgment, asking the court to decide the case based on the law and facts presented without a jury trial. July 13th, 2023, pivotal ruling. In a landmark decision, Judge Annalisa Torres issued a split decision. Ripple scored a major partial victory. The judge ruled that XRP itself is not an investment contract, and that Ripple's programmatic sales of XRP, sales on exchanges to the general public, did not violate securities laws. In other words, selling XRP on public crypto exchanges was not deemed an unregistered securities offering, largely because retail buyers didn't know they were buying from Ripple and weren't necessarily expecting profits from Ripple's direct efforts. This distinction caused euphoria among XRP supporters. Exchanges like Coinbase quickly moved to relist XRP trading in the US, and XRP's price surged over 70% in a day. However, the ruling wasn't a total win for Ripple. The judge also found that Ripple's direct sales of XRP to institutional investors did violate securities laws, since those buyers did expect Ripple's efforts to boost XRP's value. In essence, institutional sales equaled securities. Exchange sales did not equal securities. This nuanced outcome left both sides claiming a partial victory. Late 2023, further developments. The case wasn't fully over. The SEC signalled it would appeal the parts of the ruling it lost, though Judge Torres in October 2023 denied an immediate appeal until the case concluded. Meanwhile, Ripple gained some relief. The SEC dropped the separate charges against Garlinghouse and Larson in October 2023, meaning the individual executives were no longer personally on the hook. That left the legal battle focused solely on Ripple, the company. Facing a potential trial on the remaining issues, both sides edged toward a resolution. Final resolution, 2024 to 2025. In August 2024, Judge Torres issued a final judgment, officially wrapping up the case. The bottom line, XRP was not classified as a security. A clear win for Ripple and the crypto industry's hopes. Ripple, however, was ordered to pay a civil penalty, roughly $125 million for the institutional sales that were deemed improper. Additionally, the company agreed to certain conditions, reportedly a temporary restriction on raising funds via XRP sales for a few years. The SEC initially left open the possibility of appealing the parts of the judgment it lost. But in March 2025, in a dramatic turn, the SEC decided to drop its planned appeal, finally ending the 4-year legal war. This surrender by the SEC was seen as a major win for Ripple and a symbolic moment for the crypto industry. XRP's price jumped around 9% on the news, and Ripple's CEO proclaimed a long-awaited victory. Ripple's case has been closely watched as a precedent setter. The July 2023 ruling that token sales on exchanges were not securities offerings gave a boost to other crypto projects fighting similar lawsuits. For example, another court later agreed that secondary market sales of the LBRY token were not securities, echoing the Ripple logic. Crypto advocates see Ripple's outcome as a call for clearer laws instead of regulation by enforcement. However, because the case didn't go through an appellate court, the ruling doesn't formally bind other courts. The SEC dropping the case avoids a higher court decision, meaning the broader regulatory status of many tokens could remain a grey area. In the absence of new laws from Congress, the industry still craves clearer rules. Nonetheless, Ripple's win has boosted morale in the crypto community, proving that regulatory challenges can be fought and prompting US exchanges to be more confident in listing tokens like XRP. It's also set the stage for how crypto firms might approach the SEC. Some may feel emboldened to fight back rather than settle immediately. In short, the XRP lawsuit saga has been a turning point, a hard-fought battle that ended with Ripple largely vindicated, but with the reminder that true clarity for crypto will require more than one court case. Next, let's break down XRP's tokenomics. Basically, how the supply of XRP is structured and distributed, and how it functions today. Total and circulating supply. XRP was pre-mined with a fixed supply of 100 billion tokens at launch. That supply is deflationary over time, albeit very slowly. A tiny amount of XRP is destroyed as a fee with each transaction to prevent spam. As of early 2025, about 0.01 billion XRP, around 10 million, have been burned as transaction fees since the ledger started. This leaves roughly 99.99 billion XRP in existence. How are those distributed? Roughly 57 to 58 billion XRP are in circulation in the market, held by public investors, institutions, etc., which at recent prices gives a market capitalization on the order of tens of billions of dollars. The remaining approximately 42 billion XRP is held by Ripple, directly or in escrow accounts. The escrow and release schedule. What's with the escrow? In 2017, to assure investors it wouldn't dump its huge XRP stash, Ripple put 55 billion XRP into escrow accounts, with a planned release of 1 billion XRP each month. Every month, a programmed release occurs. Ripple can use a portion for its needs, selling to institutions or market makers or incentivizing partners, and usually relocks the unused remainder back into a new escrow. In practice, Ripple often re-escrows most of it. For example, if 1 billion XRP is unlocked, maybe only 100 to 200 million get put into circulation, and the other 800 plus million go back into escrow. As a result, the escrow system still holds a huge amount of XRP even years later. As of Q4 2024, Ripple's reports indicated about 38 billion XRP remained in escrow. At the current pace, escrow releases will continue until around 2026 or 2027 before all those XRP have finally been released or sold. Notably, Ripple's management has flexibility. They could continue to relock XRP, extending the timeline further if they choose to slow drip the supply and avoid swamping the market. Ripple's holdings and sales. Outside of escrow, Ripple also holds a significant chunk in its corporate treasury, around 4 to 5 billion XRP as of late 2024. These are XRP the company can use without waiting for escrow. Ripple periodically sells some of its XRP holdings to fund operations and incentivize customers to use its platforms. For instance, Ripple's Q3 2023 report showed they sold about 2.7 billion USD worth of XRP in that quarter, 892 million XRP, primarily to support their on-demand liquidity business. More on that shortly. The company claims to sell XRP in a measured way, often OTC, over the counter, to partners to avoid crashing the market. Even so, some investors worry that Ripple's periodic sales create sell pressure that could cap XRP's price growth. On the other hand, Ripple's large ownership also means their incentives are, in theory, aligned with XRP's success. They have a lot to lose if XRP fails. Token utility and economics. Unlike proof-of-work cryptocurrencies, XRP doesn't rely on miners and block rewards. All XRP exist already, so there's no mining inflation. The transaction fees are a tiny fraction of an XRP, which are burned afterwards. This means XRP's supply very gradually decreases over time, theoretically making remaining tokens more scarce. Though at the current burn rate, it would take thousands of years to make a noticeable dent in supply. The transaction cost and speed are key features. An XRP payment typically costs a tiny fraction of a cent and settles in 3 to 5 seconds. This speed and low fee make XRP attractive for high volume, low value transfers like remittances, and contribute to its positioning as a bridge currency for cross-border payments. In summary, XRP's tokenomics are unusual in that one company holds a very large share of the supply, releasing it in controlled intervals. This has pros and cons. It provides funding for Ripple's ecosystem building, but also means trust is involved. The community relies on Ripple to continue handling its holdings responsibly. Now, how is XRP actually being used? And what's the relationship between XRP and Ripple that we keep referring to? It's crucial to distinguish between XRP, the cryptocurrency, and Ripple, the company and its network. Even though their stories are intertwined, many banks and institutions have partnered with Ripple over the years, but not all of them use XRP. So who is using what? Ripple's network, RippleNet versus XRP. Ripple, the company, offers a payment network called RippleNet, a system for banks and payment providers to send money internationally with lower fees and faster settlement than traditional methods. RippleNet's software solutions, formerly known as Xcurrent, Xrapid, and XVIA, allow institutions to message each other in real time about payments and settle transactions. Important: using RippleNet does not necessarily require XRP. In fact, Xcurrent, which many banks implemented, is essentially a fast messaging and settlement system that works with existing currencies. No crypto needed. A Spanish banking giant, Banco Santander, for example, uses Ripple's tech for its OnePay FX remittance app, but confirmed it does not need XRP to work. Many of Ripple's 300 plus banking partners, as of 2020, joined the network to improve cross-border payment speeds, but initially opted out of using XRP due to regulatory uncertainty or volatility. On the other hand, XRapid, now called On-Demand Liquidity, ODL, does use XRP by design. This product leverages XRP as a bridge currency to provide liquidity when moving money between currencies. For instance, if a bank needs to send $10 million from the US to Mexico, instead of holding Mexican pesos in an account, they can convert USD to XRP, send the XRP to a Mexican exchange and convert it to MXN, all in minutes. This frees them from having piles of money parked around the world. ODL transactions essentially use XRP as a vehicular currency to bridge two fiat currencies, taking advantage of XRP's speed and low fees. Who uses XRP today? Adoption of XRP in the banking sector has been limited but growing in niche areas. While most large banks stuck to Ripple's non-crypto solutions, several money transfer companies and smaller financial institutions have used XRP for cross-border flows. MoneyGram was one high-profile example. In 2019, Ripple invested $50 million in MoneyGram, and MoneyGram began using XRP for some international payments. This partnership demonstrated real savings in transfer costs, as XRP helped settle USD to Mexico peso transfers in near real time. However, after the SEC lawsuit hit, MoneyGram suspended its use of XRP in 2021. With the legal cloud lifting, it's possible such partnerships may resume or new ones form. SBI Remit in Japan uses Ripple's ODL to send payments from Japan to Southeast Asia, leveraging XRP to bridge Japanese yen to Philippine pesos, for example. This has made certain remittances faster for SBI's customers. Tranglo, a Malaysia-based payments processor, partnered with Ripple to use ODL in Asian corridors. By 2022, Ripple announced that ODL, XRP-based, was being used in nearly 40 payout markets, including regions in Asia, Africa, and Latin America. Various cryptocurrency exchanges like Bitso, Mexico, and Coins.ph, Philippines, joined RippleNet as local exchange partners. They play a role in ODL by converting XRP to local fiat for recipients, effectively acting as the last mile banks. These exchanges benefit from increased volume and Ripple's support. Meanwhile, RippleNet, non-XRP, continues to be used by banks like Santander, Standard Chartered, and others for fast messaging and settlement without touching crypto. Ripple often touts that it has hundreds of customers, but it begs the question, how many are using XRP? There isn't much evidence to prove many more are, though with regulatory clarity, it could make more institutions open to using XRP going forward. That's certainly Ripple's hope. The XRP ledger, XRPL, is an independent, decentralized blockchain. Ripple doesn't own it, but is a major contributor and runs several validator nodes, 6 out of dozens. XRPL uses a consensus mechanism, not mining, where around 80% validator agreement is required for changes. If that threshold isn't met, the network halts, prioritizing reliability. Transactions settle in seconds. Critics argue Ripple's role in selecting trusted validators and its large XRP holdings give it too much influence. While Ripple has taken steps to decentralize validation, concerns about centralization persist. Other use cases for XRP. Outside of banking, XRP's ledger has other capabilities. It has a built-in decentralized exchange, DEX, supporting tokenized assets and IOUs, and recently it introduced NFT functionality and even hooks for basic smart contracts. Still, the XRPL isn't known as a go-to platform for DeFi or complex dApps. Networks like Ethereum, Solana, or others have far more developer activity on that front. Ripple is exploring sidechains and EVM-compatible sidechains to allow Ethereum-like smart contracts to run parallel to the XRPL, which could in the future bring DeFi activity to XRP. But as of today, XRP's primary identity remains a payments-focused asset. Many XRP holders simply invest in it, hoping its utility and finance will drive future demand. In contrast, others use XRP for quick personal transfers. Some crypto users do prefer XRP for moving funds between exchanges due to its low cost and speed. In summary, Ripple's big vision is to make XRP the backbone of international money transfers, but that vision is only partially realised. RippleNet has seen significant adoption by banks for fiat messaging, while XRP's adoption is so far mainly in remittance niches and crypto trading. The recent legal clarity in the US may encourage more usage of XRP by institutions, but it's worth noting, even without every bank on board, XRP consistently ranks in the top 5 to 10 cryptocurrencies by market cap, reflecting a combination of its potential utility and its large, loyal community. Like any crypto asset, XRP has its strengths and weaknesses. Let's lay out the key pros and cons of XRP in a balanced way. Pros: fast and efficient. XRP settles in 3 to 5 seconds and handles around 1,500 transactions per second, far outpacing Bitcoin, which is around 7 transactions per second. Fees are extremely low, making it ideal for microtransactions and high volume payments. Energy efficient. XRP doesn't use mining, making it far less energy intensive than proof of work networks. Validators are lightweight to run, and XRPL's carbon footprint is negligible, an advantage in today's climate conscious world. Proven and resilient, lives since 2012 with no major outages. XRP has weathered market cycles, co-founder exits, and regulatory battles. It's one of the oldest and most durable top 10 cryptocurrencies. Institutional adoption. Ripple actively drives use cases for XRP, particularly in cross-border payments via ODL. Partnerships with financial institutions give it credibility, and with US legal clarity now in place, more institutions may engage. Strong liquidity. XRP is among the most widely traded and liquid cryptos. It's listed on hundreds of exchanges, and post-lawsuit relistings in the US have boosted access. High liquidity supports tight spreads and large-scale transactions. Cons. Centralization concerns. Ripple holds about half of all XRP and has major influence over network development and validator selection. While XRPL governance requires 80% consensus for changes, Ripple's dominance remains a concern for decentralization advocates. Continuous supply pressure. Ripple's monthly escrow releases introduce steady supply into the market. Though pre-mined, these sales function like miner rewards and could impact price if demand doesn't keep up. Lingering regulatory risk. While the SEC case was resolved, regulation outside the US remains uncertain. Future laws or litigation could reopen classification debates, and XRP still carries reputational baggage from the long legal battle. Competitive pressure. Stellar, XLM, stablecoins, USDC, USDT, and CBDCs threaten XRP's role in payments. Stable assets may be preferred for bridging currencies. Ripple is adapting, but competition is intensifying. Limited ecosystem. Unlike Ethereum, XRP lacks a thriving DeFi or NFT scene. XRPL's features are limited for developers, which ties XRP's value more to Ripple's success than to organic third-party innovation. Price volatility. XRP, like most crypto, is volatile. It's seen big rallies and long, stagnant periods. This history could deter new investors who remember past price crashes or fear prolonged underperformance. In weighing these pros and cons, it's clear XRP is a unique asset. One bridging the traditional finance world and the crypto world with undeniable technical strengths, yet also unorthodox centralization. Let's look at the historical price performance of XRP and where do we think it going? XRP traded under a cent until the 2017 bull run, when it skyrocketed from around half a cent to over $3 per hour by January 2018, briefly becoming the second largest crypto. That boom faded fast. By late 2018, it dropped below 50 cents, spending most of 2019 to 2020 around 20 cents to 30 cents. In 2021, XRP rallied to around $1.70, but lagged peers due to the SEC lawsuit filed in late 2020. During 2021 to 2022, XRP mostly traded between 30 cents to 60 cents, holding ground but underperforming amid legal uncertainty. 2023 to 2025 momentum. In July 2023, XRP surged from around 45 cents to over 90 cents, following a partial legal win and relistings on US exchanges. Optimism returned, and by early 2025, after the SEC dropped its appeal, XRP briefly broke above $3 for the first time since 2018. It has since traded in the $2 to the $2.50 range, solidifying its top 5 market cap status. Future catalysts. With the lawsuit behind it, Ripple can fully focus on growth. A potential IPO, new banking partnerships, CBDC integrations like Bhutan, and XRPL smart contract functionality for DeFi NFTs could drive demand. XRP tends to rise late in crypto bull runs, and its low nominal price often appeals to retail investors during hype cycles. Risks and headwinds. Macroeconomic factors like high interest rates or regulatory shocks could hurt crypto broadly. XRP also faces competition from stablecoins, CBDCs, and faster L1s. Monthly XRP escrow unlocks around 1 billion per month continue, and unless offset by demand, may pressure price. Adoption momentum now matters more than ever. Traders expect delivery beyond legal clarity. In closing, XRP's story is one of highs and lows. An innovative start, rapid growth and adoption, a massive legal hurdle, and now a new chapter post-lawsuit. For the crypto savvy, XRP remains a coin to watch. Not because of hype or guaranteed returns, but because it sits at the intersection of crypto and traditional finance in a way few other assets do. Its fate will depend on real-world utility and broader market forces. A prudent outlook recognises that while XRP has unique advantages, speed, low cost, a committed institution behind it, it also faces significant challenges and competition. As always in crypto, it's wise to stay informed, avoid maximalism, and view any price predictions with healthy skepticism. Those predicting 10,000 a coin clearly don't understand and are speculating heavily with a lack of knowledge of banking and the current state of play with competition. Personally, looking at XRP, I can see $7 to $15 depending on FOMO. Conclusion. XRP has come a long way from its 2012 origins, navigating technological strides and legal strife. And it continues to be a top-tier crypto asset by market cap. Whether you're optimistic or skeptical about its future, there's no denying XRP's role in shaping crypto history. As the dust settles from the SEC battle, XRP's next chapters will be defined by adoption and execution. We'll keep an eye on how Ripple leverages its hard-won regulatory clarity and whether XRP can fulfill its ambition as a true bridge currency for the world. Only time will tell. But now you have the full story and analysis to make your own judgment on XRP. Like and follow the channel for more coin deep dives, and leave me a message in the comments on what coin I should review next.